Welcome to the weekly market recap with Sampath Securities. Let's take a look at some of the latest developments in the Sri Lankan economy and financial markets. Investor confidence plays a vital role in a country's ability to attract foreign capital and access global financial markets. A new international assessment highlights Sri Lanka's significant progress in improving transparency and investor engagement, strengthening the country's credibility as it continues its post-debt restructuring recovery. Sri Lanka has been recognized as one of the world's fastest improving sovereigns for investor relations and debt transparency, according to the 2026 Institute of International Finance, Investor Relations and Debt Transparency report. The report ranks Sri Lanka as the fourth largest global improver, reflecting the country's efforts to rebuild international investor confidence following its debt restructuring. Sri Lanka's overall investor relations country score increased to 43.67 out of 50 in 2026, up from 37.33 in 2025. This 6.3-point improvement placed the country in the top quartile among 57 emerging markets and developing economies assessed. Only Vietnam, Belize, Mozambique recorded larger improvements during the same period. According to the Ministry of Finance and Planning, the improvement was driven by stronger debt management practices and enhanced disclosure of environmental, social, and governance data. The country's ranking for debt transparency also improved significantly, rising from 19th in 2025 to 5th in 2026. The report noted that much of this progress has been supported by the Public Debt Management Office, which introduced a formal investor relations program in December 2024. The initiative aims to strengthen engagement with investors, broaden Sri Lanka's investor base, and restore confidence in international capital markets. According to the IIF, greater transparency enables investors to better assess risk, helping reduce uncertainty and potentially lowering a country's borrowing costs. While transparency alone cannot address underlying economic challenges, the report noted that it strengthens policy credibility and supports fiscal reform efforts. Looking ahead, the report highlighted that competition for global capital is expected to intensify as countries increase spending on defense, clean energy, and artificial intelligence infrastructure. In this environment, Sri Lanka's stronger performance in investor relations and transparency could help reinforce market confidence and support more stable access to international financing. Sri Lanka's sovereign credit rating remains an important indicator of the country's economic stability and its ability to attract foreign investment. The latest assessment by S&P Global Ratings points to continued progress in the economic recovery, while also highlighting several external risks that could influence the country's outlook in the months ahead. S&P Global Ratings has affirmed Sri Lanka's long and short-term sovereign credit ratings at CCC+ and maintained a stable outlook, reflecting continued economic recovery, stronger government revenue, and improvements in fiscal management. According to the ratings agency, high government revenue has supported fiscal consolidation and helped reduce debt servicing pressures, contributing to the country's improving economic position. The agency also noted that Sri Lanka's economy has performed better than expected, with real GDP expanding by 4.8% in the fourth quarter of 2025 and 5.1% in the first quarter of 2026. Looking ahead, S&P expects economic growth to moderate 3.8% in 2026, mainly due to higher energy costs and external pressures, before recovering to 4.2% in 2027 as global energy conditions improve. On the fiscal front, government revenue increased by 34% in 2025, reaching 16.7% of GDP, while the fiscal deficit narrowed to 2.3% of GDP. Revenue collection also continued to strengthen during the first 5 months of 2026, recording a 30% increase compared with the same period last year. However, S&P cautioned that Sri Lanka's external position remains vulnerable. Rising imports, currency pressures, and potential disruptions to tourism earnings and worker remittances, particularly due to the Middle East conflict, could weigh on the country's external finances. The agency also warned that a stronger El Nino event during 2026 and 2027 could pose risk to agriculture, electricity generation and overall economic activity. According to the report, Sri Lanka's continued commitment to reforms under the IMF will remain critical to strengthening the country's fiscal and external position. S&P added that strong economic performance could support a future ratings upgrade, while renewed funding pressures or significant deterioration in economic conditions could lead to a downgrade. Trade and investment reforms remain critical to Sri Lanka's long-term economic recovery and export growth. In a significant boost, the Asian Development Bank has expanded its financial support, helping the country strengthen its resilience against growing external challenges, including the economic impact of the Middle East conflict. The Asian Development Bank has doubled its financing for Sri Lanka's Trade, Investment and Industry Development Program to $200 million, providing an additional $100 million to help the economy manage pressures arising from the conflict in the Middle East. According to the report, the additional funding is aimed at supporting Sri Lanka's economic recovery at a time when high import costs and potential disruptions to tourism earnings and worker remittances continue to pose external risks. The program is designed to modernize the country's trade systems, improve the competitiveness of small and medium-sized enterprises, and attract investment into economic zones. The reforms are also expected to help local businesses expand into export markets, integrate with regional and global value chains, create employment opportunities, and strengthen private sector-led economic growth. Another key objective of the program is to diversify Sri Lanka's export base, helping reduce the country's vulnerability to future global economic shocks and strengthen its external sector over the long term. Meanwhile, ADB President said the financing is intended to help Sri Lanka create jobs, attract investment and expand trade, while strengthening the country's ability to withstand current economic pressures and future external shocks. Sri Lanka's allocation forms part of a broader $450 million ADB support package for Sri Lanka and Cambodia. Under the program, Cambodia will receive the remaining $250 million to support temporary fiscal measures and protect social spending. A government's budget performance is one of the clearest indicators of an economy's financial health. Sri Lanka's latest fiscal results point to a notable turnaround, with stronger revenue collection and prudent expenditure management helping the country record a budget surplus during the first half of 2026. Sri Lanka recorded a budget surplus of 9.5 billion rupees during the first 6 months of 2026, marking a significant turnaround from the 405.6 billion rupees budget deficit recorded from the same period last year. According to the Ministry of Finance's mid-year public finance review, the improvement was driven by a sharp increase in government revenue together with continued fiscal discipline. Government revenue and grants rose by 27.1% to 2.96 trillion rupees, while tax revenue increased by 25.9% to 2.71 trillion rupees. Non-tax revenue also grew by 43.6% to 243.6 billion rupees, although grants declined by 46.4%. The report shows that more than 55% of the government's annual revenue target has already been achieved during the first 6 months of the year, with 55.8% of the total revenue target and 55.2% of the tax revenue target already collected. The Sri Lanka Customs Department remained the largest contributor to government tax revenue, accounting for 48% of total tax collections, followed by the Inland Revenue Department with 46%, while the Excise Department contributed the remaining 6%. Revenue from vehicle imports continued to boost collections. VAT on imports increased by 25% to 443.7 billion rupees, while excise duty collections rose by 46% to 424.2 billion rupees. Revenue from motor vehicle excise duty more than doubled to 266.4 billion rupees, highlighting the strong impact of resumed vehicle imports. On the expenditure side, total government expenditure increased by 7.9% to 2.95 trillion. On the expenditure side, total government expenditure increased by 7.9% to 2.95 trillion rupees. Recurrent expenditure rose by 6.5%, while capital expenditure and net lending increased by 23.6% to 276.6 billion rupees, reflecting higher public investment. Meanwhile, the primary surplus improved to 1.24 trillion rupees compared with 859 billion rupees a year earlier, while interest payments declined by 2% to 1.23 trillion rupees, easing pressure on public finances. The report also notes that Sri Lanka's economy expanded by 5.1% in the first quarter of 2026 compared with 4.7% during the same period in 2025, supporting stronger revenue performance. The latest fiscal figures underscores the government's continued progress in fiscal consolidation and strengthens Sri Lanka's efforts to meet its targets under the IMF-supported economic reform program. Let's take a look at this week's Treasury-bill auction results. With the recent Treasury-bill auction, the 91-day T-bill rate stands at 9.86%, down by 9 basis points. The 182-day T-bill rate stands at 10.21%, down by 3 basis points, and the 1-year T-bill rate stands at 10.2%, showing no change compared to the previous week. Thank you for watching. We'll be back next week.